Hello everyone and welcome to the final video in our series of video tutorials on the MT4 indicators. Here we will be discussing the use of Bollinger Bands as an indicator. So what are Bollinger Bands? Bollinger Bands are technical tools used to measure the volatility of the price movement of a given financial instrument. It measures the extent of how high or low the price of the financial instrument to which this indicator is applied moves or deviates from its previous values. The indicator consists of two price bands, that is the upper band and the lower band, and an end period moving average that moves between the two bands. Next, we move on to seeing how the Bollinger Bands work. The three components of this indicator are the upper band, the lower band, and the end period moving average running between these two bands. Firstly, an end period moving average is selected. This can either be the simple moving average, which is the arithmetic mean of the data set selected, or it could be the exponential moving average. Having selected the end period moving average, we next move on to the upper band. The upper Bollinger Band is set at a certain standard deviation above the chosen moving average. Standard deviation is the amount of dispersion or variation of the price value from the average mean value. In simple terms, it explains how far away the data point, which is the price value in our case, is from the average mean value. Similarly, the lower Bollinger Band is set the same standard deviation as that for the upper band from the chosen moving average and is set below it. So, if the upper Bollinger Band is set 2 standard deviations above the chosen moving average, the lower Bollinger Band would be set 2 standard deviation below the chosen moving average. This standard deviation that is used is mostly calculated using the same price data that is used for calculating the moving average itself. The standard deviation is the measure of the volatility of the price movement of the financial instrument to which it has been applied. Now that we understand the basics of how to use this indicator, we shall see how we can put this to use for trading. The two price bands, that is the upper Bollinger Band and the lower Bollinger Band, act as the reference levels from where traders buy or sell the financial instrument they wish to trade. The upper Bollinger Band is mostly used as an overhead resistance, while the lower band is used as the underlying support. The moving average in the middle acts as both the support and resistance level depending on the current market price. Let's see how the Bollinger Band indicator acts as a buy signal. Some traders buy the underlying instrument as the price reaches the lower Bollinger Band and then close their trade positions around the middle band, which is the chosen moving average, or the upper Bollinger Band. Some traders might buy at the middle band and then close their trade positions at the upper Bollinger Band. They can even scale their already long positions on the underlying instrument near the moving average and then close all their positions as the price reaches the upper Bollinger Band level. Others use these bands as trigger levels and buy the underlying instrument as the price breaks above the upper Bollinger Band. As a sell signal, some traders use the Bollinger Bands to sell the underlying financial instrument as its price reaches the upper Bollinger Band and then close their trade positions around the middle band, which is the chosen moving average, or even at the lower Bollinger Band level. Some traders sell at the middle band level, that is the moving average, or scale their already short positions at the middle level and then close all their trade positions at the lower Bollinger Band level. Others use these bands as trigger levels and sell the underlying instrument as the price breaks below the lower Bollinger Band. Consider applying the Bollinger Band trade indicator onto the Aussie dollar chart. We can insert the indicator from the navigator window. As you can see, in the parameters, the period chosen is 20. This is the time period for the moving average that will be selected. You can change this based on your preferences. Let's set it at 50 period moving average. You can also set the standard deviations that you want for the upper and lower Bollinger Bands. It has been set to 2. Having chosen all the parameters, click OK. So you can see this is the upper Bollinger Band, this is the 50 period moving average, and this is the lower Bollinger Band. As you can see over here, the current price for the Aussie dollar is close to the lower Bollinger Band level. Here, the lower Bollinger Band can act as an underlying support. As the price moves up, the trader could either fully close or partially close his long position near the moving average at the middle, or hold on to it till the price reaches the upper Bollinger Band level. Similarly, at this price level, for example, the upper Bollinger Band could be taken to act as an overhead resistance to initiate sell positions for the Aussie dollar. The trader could then hold on to his sell position up till the middle band, that is the end period or the 50 period moving average as in our case, or hold on to it till the price reached the lower Bollinger Band level. The use of these bands as trigger levels can also be depicted. Some traders could use this point when the price broke below the lower Bollinger Band level as a sell signal. Similarly, at this point, traders could use this as a buy signal once the price breached the upper Bollinger Band level and moved to higher values. So this is how Bollinger Bands can be used for obtaining trade signals to initiate trade positions. An important thing to remember is that Bollinger Bands is again a lagging indicator in the sense that it uses past data to predict future price movement. This is all that we will be covering about Bollinger Bands in this tutorial. Thank you for taking the time to watch this video.